Good morning, and thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Alex Matthew, and we're here to set you up. Of course, you've gone through hopefully the trade setup for the day, and we're here to talk about a few key stocks that you should watch out for in trade today. Now, just to give you a bit of context as we head into trade, of course, the big talking point from overnight has to be the US CPI number, which slipped to that 3% mark, and giving traders around the world some sense that possibly this next rate hike, which is almost completely priced in, that could potentially be the last one. And you see optimism in the equity markets across the world, and you're seeing bond yields also in the US react to that. Possibly you could see some of that optimism rub off here in India as well. As things stand, though, the GIFT Nifty pointing to a flat start on the benchmark Nifty 50. And speaking of, you've seen a very narrow range for the benchmark Nifty 50 over the past few trading sessions. And in yesterday's session, you had a range of about 140 points or thereabouts. We ended at very close to the low point of the day because in the last half hour of trade, you had rebalancing on account of the exit of HDFC. So you saw quite a bit of action, quite a bit of selling towards the end of the trading session. And you saw the Nifty 50 reach the 19,400 mark on the downside. Of course, that 19,400 mark continues to be that crucial level to watch. If we continue to trade below that 19,400 mark, you could see weakness. However, if we breach that 19,400 mark, we could once again test that 19,500 mark in trade. The Nifty Bank has been exhibiting a little bit of weakness over the course of the last few trading sessions. Yesterday was the same. The number to watch, of course, the range to watch is 44,100 to 200, which is proving to be a support, and resistance is currently placed at around 45,000. A break below 44,500 is expected to further intensify the selling pressure. Now, of course, one of the big talking points, apart from everything we've mentioned so far, is going to be IT and IT earnings. We had HCLTech as well as TCS that reported numbers in the evening yesterday, and more or less in line, but quite a bit of a disappointment in terms of the numbers that have been reported. Tushar is joining in to give you some perspective on how they compare to what was expected. Tushar, morning. How do you rate both of TCS and HCLTech's results?
Yeah, so while TCS was in line with the estimates, HCLTech was a big miss on both the revenue and the profit front. Let's start with TCS first. TCS delivered flat growth. Revenue was just up 0.37% to 59,000 something crore. EBIT was down. EBIT margin was down. Net profit had slumped 2.8%, almost 3%. But the deal wins are still higher at $10.2 billion. And that's important. That's interesting. And in this particular climate, especially when there is little to no deal making in the US, that's happening right now. So what is exactly happening on the deal front? What the company tells us is that they have received a lot of small deals that are coming in right now, which are less than $100 million, and they're longer term deals. So what they're seeing is near-term pain, where the conversion is not happening immediately, but in the longer term, they're getting those long deals for 18 months, 20 months, or even multi-year deals right now. So the deal pipeline is looking good. The conversion into revenue is not happening at this moment. That's the key point that's take away from that. The new CEO is the Krithi Krithivasan is very circumspect on how growth will pan out for the entire year. He knows that after a flat quarter, it's anybody's guess how the entire year will fare as far as growth is concerned. The chief operating officer, Mr. N. Ganapathy Subramaniam, said that the target of double-digit growth to achieve that is completely, it's not possible this year almost. So, but the company is still confident of achieving that EBIT margin of 26 to 28% going ahead. Alex.
What about HCLTech? Could you take us through the highlights?
So HCLTech, the company has missed both its revenue as well as profit numbers. Net profit is down 11%, and revenue was down 1.2%. But the company is still sticking to its revenue growth guidance of 6 to 8% in constant currency terms, as well as its EBIT margins that is estimated at about 19%, 18 to 19%. The tech giant is the biggest drawback was in the products and platform business, which is seeing the most amount of pain. Uh, why HCLTech is not going for a revision in its guidance, we don't know yet, Alex.
Okay, fair point. Tushar, thanks so much for summing that up for us. And we've got Devang Bhatt of IDBI Capital, the lead IT analyst there, joining us right now. Devang, thank you so much for taking the time, and good morning to you. We've just had a kind of the highlights of those two companies' earnings and some flavor of what the management is saying. What is your reading of the numbers? Were they in line with your expectations, or were they below?
Good morning, Alex. So I agree with the previous participant that TCS was in line and HCLTech was a miss. Uh, there is one more thing that I need to add is in terms of DCS deal pipeline, they are consistently winning $10.2 billion plus. In terms of BSNL also, their deal is not yet, they have not yet highlighted that, and they have not added in this. So going forward, that will also happen. The only thing is that there are certain ramp downs in projects, and because of the macro situation, certain clients are not committing to invest. Say if they are committing to invest 100, out of that they are stopping at 50. So that is one of the key challenges that TCS is facing. But we think these are all near-term pangs, and a longer term perspective, digital, generative AI, cloud, data, all this is going to do very well, and from that perspective TCS will be a key beneficiary. TCS benefits from both sides. One is when there is cost efficiency deals, they get large cost efficiency deals, and they also benefit from vendor consolidation. Uh, when it comes to say digital deals, generative AI, they are also better in that. So whenever the macro situation is worse, they're gonna win good deals, and then that revenue will probably start to see in Q2 onwards. The CEO was a bit conservative because obviously he's new. But we see that from Q2 onwards, growth will start to improve. In terms of margins also, although they aspire to reach 26 to 28%, we believe in the near term they might reach to 25%, and then probably they will try to surpass that. So overall, both, even we have done a client specific analysis for TCS, and we believe TCS will be a key beneficiary because all those clients, the larger banks are its clients, and they are doing well. So maybe short term there might be certain issues, but longer term they will be the key beneficiary.
Okay.
And in terms of
You were saying in terms of HCLTech?
Yeah, in terms of HCLTech, their confidence from guidance achievement comes because I believe that they might be incorporating the inorganic acquisition. I mean the acquisition that they have announced, an auto ER&D company. So that will be consummated in September. So that might contribute to around 1%. So that might help them achieve the lower end of the guidance, and that is what we are betting also. That they will be on the lower end of the guidance, and they will also be on, in terms of margin also, they will be on the lower end of the guidance. Product business will continue to be subdued.
Okay. Okay. So what I'm getting from this, and what you're saying, Devang, is effectively that there are near-term concerns. At least for TCS, Q2 onwards, things might look a little better. But the mood, I think, heading into these results as well, has been a little bleak for the stocks, and the stock performance has reflected that. So would you say, therefore, that this is a time, if you see further correction, to accumulate these two stocks if you get the opportunity? And what are your targets 1 year forward?
So we have a buy rating for TCS, and our target price is 3740. However, we are not comfortable with HCLTech. And we still see that there might be some client specific issues that might pan out for them, and that's why we have a hold rating for HCLTech with around target price of 1,100 rupees. So we see that there might be a further downside to it.
Okay, so that's the perspective on these two counters. But the other one to watch, of course, Devang, in trade today, and perhaps you can give us the key numbers that you're watching for Wipro. What, according to you, is the key factor to watch?
So in terms of Wipro also, everybody like in TCS, HCLTech, everybody was talking about generative AI, and Wipro is also going to invest in generative AI. But as we told in HCLTech, there are client-specific issues. Similar issues are there for Wipro also. So in the near term, we believe that they might face these challenges. Plus, their consulting business, which is good when the macro is good, so that will continue to suffer. That will impact their revenues and margins. So that's why even for Wipro, we believe that it's kind of a wait and watch rather than we would prefer TCS and Infosys.
Okay. Thanks so much, Devang, for that perspective. And thanks so much for taking the time and speaking to us this morning.
Thank you.
All right, let's turn to other stocks that you need to watch out for in trade. And of course, Patanjali is going to be a key mover, perhaps, in trade on account of the announcement of an OFS by the promoter, offer for sale. Up to 9% stake is on the block. Varsha is joining in to give you some more perspective on that. Morning, Varsha. What are the details?
Yeah, so Patanjali Foods, formerly known as Ruchi Soya Industries, has launched an OFS that will allow its promoter entity, Patanjali Ayurved, to offload 2.53 crore shares at a floor price of ₹1,000 apiece. Now, the OFS will be executed over 2 days, with an offer being opened up for non-retail investors on July 13 and for retail investors on July 14. Also, the promoter will have an option to additionally sell up to 2% in the event of oversubscription. Now, the floor price, which I just mentioned, that is 1,000 apiece, will mark a discount of 18% over the current market price. At present, the promoter and promoter group collectively hold 80.8% in Patanjali Foods. Among them, Patanjali Ayurved is the largest shareholder with a stake of around 39%. Now, the OFS at the base offer, this will fetch Ramdev Baba Group-led entity almost around 3,258 crore.
If it goes through as planned, absolutely.
Yes.
Varsha, thanks so much for that update. You might also watch out for Reliance Industries. Just an operational update. We've given you an idea over the past few days when the company announced that its financial services arm, Geo Financial Services, would be demerged and listed separately. The record date, of course, for that has been set at the 20th of July. And the exchanges, on the basis of that, have announced that all derivative contracts that are currently underway will expire on the 19th of July, and new contracts will be set up on the 20th of July. A separate window has been set between 9 and 10 o'clock in the morning for pricing of those fresh contracts that will come into play. Now, let's also turn now to the aviation space. SpiceJet is the next counter that we're focusing in on, and this is going to be a big move, in fact, for the airline, with the promoter stumping in money when the airline seemingly needs it the most. Himansh is joining in with more perspective. 500 crore, nothing to sneeze at.
Right.
What are the details?
Right. So finally, some good news for SpiceJet coming in. So SpiceJet promoter, Mr. Ajay Singh, has offered to infuse roughly 500 crores of equity in order to strengthen the company's financial position. The infusion will be done through subscription of equity shares or convertible securities on a preferential basis in several tranches. SpiceJet further said that the fundraising will also be considered as equity contribution by the promoter under the Emergency Credit Line Guarantee Scheme, which will provide additional credit facilities to the airline to the tune of roughly 206 crores, in addition to the already utilization levels of $50 million. These funds are critical in reviving their grounded fleet and getting back up ever since from the wake of COVID. So the fundraise comes as reports of the airline increased surveillance by the DGCA have been seen coming in. And despite the sharp recovery post-COVID, the airline has struggled to keep up with the surge in demand. SpiceJet's share of domestic passengers in the month of May stood at a mere 5.4%, a noticeable downtrend if you compare it to the passenger traffic share it had back in January early this year. It has also been facing several legal disputes. For example, the Supreme Court on Friday directed the budget airline to pay an arbitral amount of 380 crores to the former promoter, Mr. Kalanithi Maran, in their legal dispute, a development which may further impact the debt-laden carrier. And on June 21, the airline also entered into a settlement with Nordic Aviation Capital for its Q400 planes. So overall, the airline has incurred substantial losses. For example, in the last 3 quarters of FY23, their consolidated net loss stood at 1,500 crores, and the fourth quarter results are yet to be announced. The stock is down 20% year to date, and now it's for us to see if the show of confidence from the promoters end is sufficient to pull out this airline from its rough patch.
Thank you so much, Himansh, for that. Certainly a space worth watching, the aviation space in India. And the data that Himansh was pointing out, the May data with regard to market share, that's, remember, where Interglobe Aviation or Indigo captured a lion's share of the market on account of the grounding of Go Air. It was about 60% of the market. And then you have the likes of Vistara as well as Air India that capture quite a chunk of the rest of the market as well. Order wins up next. Deep Industries is the stock that we're focusing in on. And Rishi joining in with some details here. Rishi, there's an order win to talk about.
Yeah, so Deep Industries won an order worth of 130 crores from ONGC. And so Deep Industries specializes in providing equipment and services for oil and gas field operations. And this is done both on a rental and a chartered basis. So this order that it won from ONGC was for 90 MT mobile drilling rigs and equipment along with manpower services. And this will be for a period of 3 years. Now, and it will be specifically for ONGC's Bokaro asset that is in Jharkhand. So this order for the mobile drilling rig is something that Deep Industries won from ONGC. So this is the second order that it won. So it had won the first order in February, and that was also a 100 crore worth of order. And Deep Industries had an order book that crossed the 1,000 crore mark in the previous fiscal. So in other news, Deep Industries also acquired 74% stake in Bretlung Drilling. So this is a private company that is based out of Ahmedabad, and it's into oil and gas extraction. So this is quite a small company if you look at it. It has a authorized share capital of 1 lakh and paid up capital of 10,000 rupees. So overall, I believe a positive news for Deep Industries, and the stock may continue its rally. In fact, it has almost doubled over the past 1 year. So I think it's a positive news, and we may need to look out for the stock.
Absolutely. Thanks so much, Rishi, for that update. All right. So Deep Industries, something to put on your radar today, but there are a number of other stocks also that have posted notifications, and we've got some fundraising announcements to talk about, or rather plans to talk about, and we've got Saloni joining in to tell you about that. Saloni, a couple of counters to watch out for?
So we've got two. So the first one is Star Housing Finance. So the board of the company is scheduled to meet on 15th July, which is this Saturday. The board will be considering fundraising by issuance of equity shares by the way of preferential issue through private placement. And the second one that we've got is Texmaco Rail and Engineering, whose board is scheduled to meet on 17th July, which is this Monday. So the board will consider proposals for raising of funds by the way of issue of one or more instruments, including equity shares and convertible securities or any other stipulated mode. So both these companies are the fundraising of both of these companies are subject to the approval of the company's shareholders.
Absolutely. Thanks so much, Saloni, for that update. A few more stocks to tell you about, and in fact, we're soon going to get Mika to tell you about those. But in the meanwhile, you should also watch out for Brent. It has crossed the $80 per barrel mark in trade yesterday on account of expectations of improved demand once the situation in the US is resolved in terms of monetary policy. But we've got Mika joining in. Mika, what are you picking up?
Okay, to start off, and with the Brent crude prices, it has climbed over $80 a barrel for the first time since early May, which is a sign of supply gradually tightening and demand growing. The latest oil price rally comes across after Saudi Arabia, for the second month running, extended its voluntary 1 billion barrel liters per day oil production cut for another month. And this time, this is extended till August. The reduction will take the country's production to 9 million billion barrel liters per day. The price hike is a positive for crude exploration and production companies, and on the contrary side, the rise is negative for the paint and tire companies, as these companies use crude byproducts as a key raw material. Other two stocks that we've picked up is one is Primo Chemicals. Europe-based financial services group Societe Generale has bought 1.98% equity stake in Primo Chemicals via open market transactions on July 12th. General bought around 47.97 lakh equity shares at an average price of rupees 60.1, and the total stake buy was worth around 28 rupees 0.83 per share. The stock rallied nearly 5% to 63 rupees on the BSE on July 12th. And secondly is Hindalco Industries, which has approved a land sale proposal of a land parcel at Kalwa, Maharashtra. The total area of the land is 12.95 acres and the proposed selling price is 595 crores. The sale of the land parcel is part of Hindalco's strategy to focus on its core business and reduce its debts, and the proceeds from the sale will be used to repay debt and for other general corporate purposes.
All right. Thanks so much, Mika, for that update. All right. Well, there you have it. That's more or less a wrap on today's edition of Trade Talk. We've spoken about a number of counters, and particularly the IT sector is going to be in focus. One more point before we end, though. This is a heads up for an event that we have later today, and this is the India Opportunity Summit. And we've got a list of market veterans, household names that will tell you about the Indian opportunity, and they'll tell you about the trends that you need to watch out for, and quite importantly, the mentality that you need to have as an investor to really make it large in the Indian equity market. It's been an absolute pleasure bringing this show to you. There's a lot more coming up over the course of the day, and you'll find all of that right here on BQ Prime.
How do you make the most of the India opportunity as an investor? For that answer, all roads lead to BKC in Mumbai on the 13th of July. Three big money managers describe the size of this opportunity. Two of the largest mutual fund CIOs then tell you about the mega trends that they're investing in. Will the current capex cycle be similar to the one between 2003 and 2008? We get that answer from Sanjeev Sharma of ABB in a conversation with veteran investor Madhusudan Kela. And then we round it off with two of the most prominent investing names talking about how to make the large bets and make it really big. All of this and more at the Trident Hotel in BKC on the 13th of July. Catch the action live on BQ Prime.